Yeah, good afternoon, dear members. So, after a long time, welcome to AVCM on GST from Trichur branch. So, we have today CP discussion dealing with various GST issues concerning real estate and works contract. Now, for the handling the topic, we have an speaker from Trichur branch, CA Anthony S. UKKEN. He's well versed in GST affairs. Now, on the screen, we have the very dynamic chairman, C. Anup G, chairing the session, along with our own vice chairman, C. Arun TK, and treasurer, C. A. Satish TG, who will aid in moderating the session. He is, of course, practicing in GST also. Now, dear attendees, please make use of this Q&A link that is available in the Zoom and for typing in your queries. The same will be addressed in the Q&A session after the presentation. Now, over to you, Chairman, for the welcome speech.
Thank you, C. Ajit. Good afternoon, members. We are meeting after a small gap. Last month, Navaratna was organized jointly by all 9 Kerala branches. It was a grand success. All the sessions were attended by almost 600 to 700 members from across the state. So there was very good participation from Thrissur branch also. I thank all the members from our branch for the participation in the program. Before going for the program, there is a small announcement. Members, we are in the process of redesigning our website. The web designing work as per the design given by our HO is almost in the final stage. So along with that, we thought of updating our members directory as well. So as all of you know, we updated our directory some 5 to 6 years ago. So it's need of the hour. So a draft digital directory with all existing details that is getting ready now. So we would be circulating the same among you. So members would be able to log in to view their details with an option to edit wherever necessary. So that is happening now. So I request all the members to spend some time on it and update the information. So I hope that it will be ready by at least, it will take at least 1 more week. It will be ready by 1 week. Yeah. And today we have a young member from our own branch who has come forward to handle a topic in GST, CA Anthony S. UKKEN. He's a youngster who is very update, as CA Ajit rightly pointed out. He is very update in latest developments in GST. Today he would be speaking about GST in real estate and works contract. And CA Satish TG, our treasurer, has consented to support him wherever necessary. I welcome the faculty of the day, CA Anthony S. UKKEN, to this webinar. I welcome all the members to the webinar. Now over to you, CA Satish TG, to formally introduce the faculty and also to chair the session. Over to you, Satish.
Thank you, sir. Good afternoon, dear members. Today, as Anup said, we have a faculty from our own branch, C. Anthony. You all may be familiar with C. Anthony. He qualified his chartered accountancy in the year of 2012. He was graduated from Christ College in Yalakuda. After passing out his exams, he started practicing as a chartered accountant with CA GV Sukumar sir. Then he moved to CA PK Jain sir in 2014, 2013, and in 2014, Anthony started practicing himself. Now he is practicing individually. He is specialized in GST and direct taxes, especially in GST. With these few words, I introduce CA Anthony. Thank you.
See, Anthony, you can start the session.
Okay. Respected Chairman, Vice Chairman, secretary, and other members. Good afternoon. Today, we are going to discuss the topic GST on real estate and works contract. Let us begin with first part, GST on real estate sector. What is the purpose of GST on real estate sector? Why it is being introduced? GST on real estate sector is being introduced so that the builder can claim input tax credit on raw materials, labor, or any consumables purchased by the builder for paying his own output tax liability. After 33rd and 34th GST Council meetings, this GST on real estate sector has undergone certain changes. We'll discuss on what are those changes, and we'll discuss in detail the concept of GST on real estate sector. Firstly, we'll understand how the valuation is to be done. Valuation is necessary to so that the GST can be computed on the value, assessable value. How the valuation is calculated, we'll see first. Valuation of surprise. Since sale of, we all know that sale of land being an immovable property, does not come under the purview of GST. So sale of land is not taxable under GST. Hence, the GST law provides a standard abatement of 33%, or 1/3 of total contract value or agreement value, or deduction towards the value of land. Here an issue comes. If the value of land is separately ascertainable, whether that value is to be deducted or computed value is to be deducted. For example, if the actual value is rupees 50 lakhs, whereas the computed value is rupees 40 lakhs, whether 50 lakhs is to be taken into consideration or rupees 40 lakhs is to be taken into consideration. Nothing in the provision of law provides a solution to this issue. As of now, 1/3 deduction of land is to be provided so as to arrive the taxable value in respect of this construction service. This effective tax rate we will discuss in detail on coming slides. Then we'll move on to the input tax credit restrictions and reversals under this development projects. As we have already discussed, GST on real estate sector is introduced so that the builder can claim input tax credit. But there are certain restrictions in relation to input tax credit for availment of input tax credit under the under various development projects. First is sale of properties, which is after obtaining completion certificate. The sale of properties after obtaining completion certificates comes under para 5B of Schedule 2 to CGST Act 2017. Under this schedule, this sale of properties after obtaining this completion certificate is not liable to GST. Hence, input tax credit is not available. Second one is goods or services procured for construction of building. It's used for one's own account. For example, if a building is constructed for the builder's own self-occupation or renting out the building, then input tax credit will not be available on such transactions. If the builder has taken any input tax credit, he has to reverse the same. Under the present situation, the property is constructed in a joint development agreement, which means that the builder, along with the landlord, enters into an agreement to develop the project. Earlier, the builder himself had to purchase the land and do the construction work. Here, now he can share the right of construction with the landlord. Landlord will transfer the right to construction to this the builder by way of transfer of power of attorney, and the builder does all the paperwork and does the construction work. It is called joint development agreement. there are two types of model in joint development agreement. First one is revenue sharing model and second one is area sharing model. In revenue sharing model, after the builder sells all the property, out of the total sales revenue, the builder will transfer some portion of the revenue to the landlord. It is called revenue sharing model. Whereas area sharing model, here the builder transfers the right of certain number of flats to the builder. The builder transfers the share of flat to the landlord before the construction is completed. It is called area sharing model. The difference is that in revenue sharing model, the landlord gets the consideration in the form of money, whereas in area sharing model, the landlord gets the consideration in the form of flats. Here, in area sharing model, the builder can take the input tax credit, full input tax credit, but if the building is the right for certain flats is transferred to this landowner, the landowner cannot claim input tax credit if the landowner sells the flat after getting the completion certificate. For example, if the builder constructs enters into an agreement for construction of 5 flats, and two of the flats, the rights for 2 of the flats are being transferred to the landowner. The landowner, after getting completion certificate, if he sells the flat, he cannot claim the input tax credit in respect of such flats, since as per paragraph 5b of Schedule 2 to CGST Act 2017, the sale of completed flats, for sale of completed flats, GST is not applicable. We have seen the valuation aspects, input tax credit, reversal of input tax credit aspects, and the joint development agreement aspect. Then we will move on to how the additional charges and reimbursable components are being treated under GST. First one, we will move to the reimbursable component aspect. Reimbursable components are in some cases certain charges are to be paid by the builder to landowner in addition to the consideration for for construction service. Certain charges have to be paid to the landowner. For example, preferential location charges. If the building is to be constructed near a hospital, near a school, or near a shopping mall, the builder has to pay preferential location charges to the landowner, since after selling this property, the customer of that property can get easy access to the shopping mall or hospital or school, as the case may be. Since it is a preferential location, he has to pay, the builder has to pay preferential location charges to the landowner, which is ultimately recovered by the builder from the customer. Here the preferential location charges, I was telling an example, or any other reimbursable components are there. These components are treated as a part of composite supply, in which principal supply is construction service, and the GST on construction service is applicable to the GST rate on construction service is applicable to the this reimbursable components. Second one is charges, additional charges incurred by the builder. For example, in some cases, the builder enters into an agreement with the landowner, in which, in addition to the construction service, the builder also enters an agreement with the landowner for works contract service also, towards interior construction or sale of mock-up flats. This contract is entered for a consolidated amount, both sum total of charges towards construction service as well as the works contract. Here, the consolidated amount should be split into two, which is one is attributable to the construction service as well as the other one for the works contract. From that charges, the amount attributable to the construction service, 1/3 value is deducted towards value of land to arrive the taxable value. This is how the additional charges are to be treated under this real estate GST on real estate sector. Then changes in real estate sector with effect from 1/4/2019. After 33rd GST Council meeting, changes in there are certain changes in GST rates which was introduced with effect from 1/4/2019. First one is for residential projects. For new residential projects means the projects which have started after 1/4/2019. The GST rates are 1% or 5% on total consideration, depending on whether it is an affordable or non-affordable housing project. This tax is to be paid without using ITC. For ongoing projects, we understand what is the which are the ongoing projects. Ongoing projects are those projects for which commencement certificate has been obtained before 31st March 2019, which is started before 2019. Booking is completed either wholly or partly before 31st March 2019, but the construction has not been completed or completion certificate has not been obtained even after 1/4/2019. These are ongoing projects. Here the promoter had the option. Here it is written has the option, but he had the option to pay GST at old or new rates. Old rates being 8% or 12% based on whether it is affordable or non-affordable housing project. Promoter had to exercise the option before 10/5/2019. The option has to be submitted before the jurisdictional commissioner. The date is already over. Now for ongoing projects also, the project which has not been completed yet. For ongoing projects also, the promoter has to compulsorily adopt the new rates, 1% or 5% on total consideration. Next one is commercial projects. Commercial projects are split into two, classified into two, RREP and other than RREP. RREP means residential real estate projects. Residential real estate projects are those projects on which not more than 15% of the total carpet area is being used for commercial projects, commercial purposes. Not that project in which not more than 15% is used for commercial purposes and the rest being used for residential purposes. The effective rate being 5% without using ITC. Other than residential real estate projects, effective rate being 12% by using ITC. Here, one important point is to be noted is that these are all the effective rates. Effective rates means the rates after considering 33% deduction towards the value of land. The actual rates being for new projects 1.5% or 7.5% on total consideration. Ongoing projects old rates being 12% or 18%. For RREP, effective rate of 7.5% and other than RREP, effective rate being 12%. This reduced to these rates. One RREP residential project 1% or 5%, RREP 5% without ITC, other than RREP 12% with ITC. Then we'll understand what is affordable housing project. What does it mean? Affordable housing project is residential house or flat of carpet area up to 90 square meter in case of non-metro cities, and up to 60 square meters in case of metro cities, and having value of up to 45 lakhs in both metro cities as well as non-metro cities. Here both the conditions have to be cumulatively satisfied, so as a residential housing project become affordable housing project. If any one of conditions or both the conditions are not satisfied, then the project becomes non-affordable residential housing project. Then we see the applicability of GST on reverse charge basis. Generally, the promoter has to pay GST on all expenses incurred on reverse charge basis, and thereafter he can claim the input tax credit. Here also there are two situations emerges. First one, purchases from registered supplier. The purchaser should be from registered supplier should be more than 80% of the total value of purchases, so that the builder can claim GST on forward charge basis, which means that the registered supplier can collect input tax from the builder and pay to the government, and thereafter builder can utilize that input tax credit for payment of his output tax liability. If the value of purchase from registered supplier is less than 80% of total value of purchases, the promoter has to pay GST on reverse charge basis to the extent short of 80% of inward supplies by the promoter. For example, if the promoter purchases only 60% of total value of purchases from the registered supplier, whereas he has to purchase 80% of inward supply from the registered supplier. Here, the promoter has to pay GST on reverse charge basis on the differential 20%. The GST has to be paid on the following rates. GST at the rate of 18% on all inward supplies except cement. For cement, separate GST rate at the rate 28% is given. On capital goods, GST will be payable on the rates applicable to those capital goods purchased. Second one is supply of TDR, FSI and long-term lease of land. Here the promoter has to the promoter, which is the builder, has to pay GST at the rate 18% on reverse charge basis at the time of completion of the project. This aspect we will discuss in detail in the later slides. Next one is ITC on ongoing projects. What is ongoing projects? We have discussed earlier. For ITC, in case of commercial projects, ITC is provided on percentage completion basis, either percentage invoicing or percentage booking of flats. For example, if the commercial project is 100%, even if the project is 100% completed, if invoicing is done, booking of flats is done only 40%, then the project is completed at only 40%. The project is only 40% completed for utilizing ITC. Then ITC in case of commercial come residential projects. Here ITC will be provided on pro rata basis on the basis of carpet area used for commercial purposes divided by the total carpet area of the entire project. We will discuss these aspects with the help of illustrations. First illustration. A project has 100 flat schemes of 1000 square feet each. Construction, 40% of construction is completed, 20% is billed to the customer. Billing is done only 20%. The ITC is rupees 2 crores. Here, if up to 40% construction, ITC is rupees 2 crores, then up to 100% completion, the ITC will be extrapolated to rupees 2 crores divided by 40 into 100, rupees 5 crores. Rupees 5 crores is assumed to be the ITC when the project would have been 100% completed. On the basis of booking of flats, the ITC eligibility will be 1000. square feet multiplied by 100 flats multiplied by 40% completion multiplied by 20% building, which is 8,000 square feet, or 8,000 square feet divided by total 1 lakh square feet into 100 is 8% completion. ITC available will be rupees 5 crores. Rupees 5 crores is assumed to be the ITC in case the project is 100% completed. ITC available will be rupees 5 crores multiplied by 8%, the computer percentage, which will come to rupees 40 lakhs. Continuing the above illustration, if out of the out of the 40% construction completed, only 25% is used for commercial purposes, then the ITC will be 8%, which is already computed, multiplied by 25%. Only 2% of the total ITC of rupees 5 crores will be available, which means rupees 10 lakhs only will be available. The builder can use this ITC for his output tax liability. If there is any balance ITC remaining, he will be allowed to carry forward and set off for his future output tax liability. Next one is supply of FSI, TDR, FSI and long-term lease of land. We will discuss it in later. In detail, we will discuss in detail this supply of TDR, FSI and long-term lease of land. What is supply of TDR? Supply of TDR means transferable development rights. TDR means transfer of development rights, which is different from transferable development rights. Transferable development rights is those rights which are given by the government to the landowner for relinquishment of certain rights. For example, if the government compulsorily acquires a portion of area of the landowner for widening of road, and the government gives this instrument of which is called transferable development rights to the landowner, and the landowner can further use this transferable development rights, or he can sell this transferable development rights to another person. It is different from transfer of development rights. Here, in case of transfer of development rights, the right to construct the building is being transferred by the landowner to the builder in the form of power of attorney, and the builder does all the paperwork, obtains all the licenses, and completes the construction of the project. Certain changes have been introduced after with effect from 1/4/2019 after 34th GST Council meeting. The changes are in relation to the time of supply for FSI and long-term lease of land. For TDR, no significant changes have come. Let us see in detail what are the changes and various aspects regarding to TDR, FSI and long-term lease of land. First one, TDR, received before 1/4/2019. In case of residential apartments which is booked before issuing completion certificate, no GST is payable. Otherwise, if booked after the issuance of completion certificate, GST is payable at the rate 1% or 5%, depending on whether the project is affordable or non-affordable housing project. Generally, GST is payable at the rate 18% on supply of TDR. But since it is in relation to the residential apartments, the rate is being restricted to 1% or 5%, depending on whether the project is affordable or non-affordable housing project. If the TDR received on or after 1/4/2019, in case of residential projects, the same situation applies. For commercial projects, for commercial apartments, if TDR received before 1/4/2019, whether the apartments are booked before issuance of completion certificate or after issuance of completion certificate, GST is payable at the rate 18% after the construction is completed. If TDR received before 1/4/2019 also, if TDR received on or after 1/4/2019 also. Then we'll come on to the next aspect, FSI. FSI means floor space index. Floor space index is the ratio of the total area of building constructed to the total area of land in which the building is constructed. If, for example, if FSI is 1.5 and the area of land is 1000 square meter, the maximum permissible area of building will be 1500 square meter. If the builder wants to construct 2000 square meters of building, he should pay additional FSI premium to the local authority or municipality for this additional 500 square meter. We will see what all the changes took place after 1/4/2019. First, we will see how it is FSI payment of FSI is treated if it is received before 1/4/2019. In case of residential apartment, same as in case of TDR, the same situation emerges. If residential apartment booked before issuance of completion certificate, no GST. If booked after issuance of completion certificate, 1% or 5%, depending on whether affordable or non-affordable housing project. If TDR received on or after 1/4/2019, the same situation. For commercial projects, if TDR received before 1/4/2019, if the commercial apartments are booked, even if it is booked before issuance of completion certificate or it is booked after issuance of completion certificate, GST at the rate 18% is payable by the builder on reverse charge basis after the construction is completed. Now we will see the important change which took place after 34th GST Council meeting. When FSI is received after on or after 2019, in case of commercial apartments, if commercial apartment is booked before issuance of completion certificate, and if the amount is paid in the form of money, then GST is payable at the time on which the amount is paid in the form of money, which means that if the consideration in the form of FSI is paid before completion of the project, then GST is to be paid at the time of payment of consideration. The builder need not wait till the completion of project. He has to pay immediately at the payment of consideration. Then if the consideration is in the form of apartments, then GST at the rate 18% is payable after the completion of the project. Then we will see the next aspect, long-term lease of land. If what is long-term lease of land, we will understand. Instead of TDR, the builder takes the land from this landowner on long-term lease basis for construction of building. Long-term lease is either for 50 years or 100 years, etc. If the lease premium is, if the lease amount is received before 1/4/2019. In case of residential apartment, same treatment as in case of TDR and FSI. If residential apartment is booked before issuance of completion certificate, no GST, otherwise 1% or 5% GST. If in case of commercial apartments, if booking is done before issuance of completion certificate, if the upfront fees is paid before issuance of before completion of the project, then GST is to be paid at the rate 18% when the upfront fees is paid. The builder need, here also the builder need not wait till the completion of the project. If upfront fees is paid before completion, then 18% GST at the time of payment of fees, upfront fees. If after completion, then GST is payable at the time of completion of the project. If the upfront fees is paid in the form of apartment, GST is payable at the time of issuance of completion certificate. Before 1/4/2019, if in case of commercial apartment, even if it is even if booking is done before issuance of completion certificate or after issuance of completion certificate, GST is payable at the rate 18%. These are all the FAQs in relation to GST on real estate sector, which you can get from the site www.cbse.gov.in, and you can download it and use for your further reference. Then we'll move on to the next part, GST on works contract. We'll read the definition of works contract under GST. Section 2, subsection 119 of CGST Act 2017 defines works contract as: works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning of any immovable property wherein transfer of property in goods, whether as goods or in some other form, is involved in execution of such contract. If a contract is to be called as works contract, a transfer of properties in goods has to be involved in the execution of works contract. If there is no transfer of property in goods, it will become a pure labor contract. After introduction of GST, some changes have come into the definition of the works contract. Here, works contract under GST means works contract, a contract for building, construction, fabrication, etc. of any immovable property. Earlier, under VAT and service tax regime, the works contract means contract for building, construction, etc. of movable as well as immovable property. Now, here it is only immovable property. Now, we'll see how works contract is treated under GST. Under GST, works contract is treated as supply of services. Earlier, under VAT and service tax regime, the works contract is treated as sales under VAT as well as services under service tax. Now, after introduction of GST, works contract is treated as supply of services under GST. Then we'll see how input tax credit is taken on works contract. Generally, on works contract, input tax credit will not be available since it is blocked under Section 17, subsection 5 of CGST Act 2017. As per Section 17, subsection 5, clause C of CGST Act 2017, no input tax credit available in respect of works contract. There are some exceptions. There are two exceptions in relation to input tax credit on works contract. First one is when the works contract is used as input service for further supply of works contract services. For example, if Choba developers undertakes construction works contract to construct 5 buildings, and works contract for construction of 1 building is being subcontracted to a person called Mr. A. So, if this Choba developers pays input tax to this a person called Mr. A, then the Choba developers can claim the input tax credit for further for payment of the output tax liability of Choba developers. Then next point is works contract in respect of plant and machinery. In case of work contract in respect of plant and machinery, ITC will be available. The reason is that work contract in respect of plant and machinery comes under the exclusion clause of the negative list. So if the plant and machinery is used by the customer for use in the course and for his course and furtherance of his business, the input tax credit will be available in respect of the work contract in respect of plant and machinery. The only condition is that the plant and machinery should be used in course and furtherance of his business. Then the rates of GST on works contract, various rates of GST on works contract is being shown in this table. In brief, the GST on rate of GST on works contract will be 18% on other than government projects and 12% on government projects. The various rates are given in this table. Then we will move on to the price of supply aspect in relation to works contract. In works contract, price of supply will be the location of immovable property which is constructed. If the immovable property is located outside India, then the price of supply will be the location of the service recipient. This is the, in summary, this is the price of supply in relation to works contract. Every developer has to take GST registration in every state where this works contract project is undertaken. For example, if a person is registered under GST in Kerala and he does works contract in the state of Tamil Nadu, then the developer has to take separate GST registration in the state of Tamil Nadu where the immovable property is located. Then the next aspect is taxability of stock transfers. Generally, stock transfers are treated as supply under GST. Then, so if any raw materials, inputs, capital goods, consumables, etc., are transferred from one location to another location, it is treated as supply under GST, and GST is payable on such supply. This is the end of my presentation. I thank all the members who have attended this seminar, and also I thank the institute for giving me this opportunity. Thank you. Okay.
Anthony, we have some more time. Can we discuss that FAQ for some time?
Okay, okay.
Satish, I think we have more time. And I do request the members to utilize this time to address your queries in the chat box so that we can take it up. On the screen, we have our faculty, C.A. Anthony S. UKKEN, and along with him, C.A. Satish TG, who does specialize in indirect taxation, is there to aid him also. Dear members, please utilize this time to post your queries. Thanks a lot.
Yeah, Anthony, I have one doubt. Can you hear me?
Okay, yes, sir.
Yeah, one of my clients, he received a notice. He's a builder actually. So he received a notice. Actually, he is engaged in construction of residential house, residential flats, in fact. So with respect to a particular flat, the construction of the flat started in the service tax VAT era, that is before GST. And it was completed in the GST era. So the notice says, and he is following AS7 with respect to revenue recognition. So in the notice, it says in your balance sheet, there are certain advances. See, this advance is, advance comes like this, no? If you, in the case of percentage completion, if 30% is completed, you will recognize income up to 30%, is it not?
Yes.
So, amount received over and above this 30% will be shown as advances in your balance sheet. So with respect to this advance, actually he has paid VAT as well as service tax. But now the GST people say, since the completion of the flat is in the GST period, you have to pay GST for the that advance also. So in fact, then their contention is that you should have taken Tran 1 and you should have taken credit for the service tax VAT that you paid during the for the advances. So this is the contention. So can we object to this particular contention of the
Yes.
GST people?
A clarification, sir.
Yeah, please.
A clarification has been issued by CBSE in regard to GST of under construction and ready to move in property. If the consideration is paid by the builder before 1st July 2017, and the construction has not completed even after 1st July 2017, then here the service only service tax is payable, and it does not come under GST. GST is not payable. Service tax is payable at 4.5 percentage. This clarification is given by CBSE in relation to the applicability of GST of under construction and ready to move on property. The property which has started construction before 1st July 2017, but it is not the construction is not completed, and the consideration is already paid before 1st July 2017. Here, service tax is payable at 4.5%. If part of the consideration is payable, paid on before 1st July 2017, then on that part, service tax is applicable, and if balance part of consideration is paid after 1st July 2017, then on balance part GST at the rate 12% is applicable. This is how the clarification is given.
So that means for advances that the service tax only is applicable.
Yes, yes.
Yeah, can you tell me the date on which that clarification was issued? Is there any
clarification issued? Date is not given here.
Okay.
I'll check and
okay.
give the details.
Okay. Satish, do you have a different view on this? Satish, can you hear me?
Hello.
Can you? Yeah. Do you have a different view?
No, sir. What Anthony said is correct. I have read this clarification.
Okay.
But I have one more thing to say.
Yeah.
You said that advances are only due to the AS7 compliance only.
Yeah.
In that case, that advances are not taxable. No need to credit avail that transitional credit.
Okay. Actually, they are not looking into the agreement and saying that typically in an agreement it says 10% on completion of first floor, 20% on completion of second floor, like that only. But they are not looking into that particular repayment schedule and all. What they say, no, as per AS7, this is the amount that you credited in your books. So we agree to that. The amount received over and above this percentage of completion is advances, for which you have to pay GST because the completion happened after GST. That is their contention. And one more thing, one more issue, Anthony, especially that completed flat, completed flat, as you said, that it is exempted. We all know.
Paragraph 5B to schedule 2 of
yeah.
GST.
But the thing is that again, you have to reverse the input. That I agree. But then, at what point of time you have to reverse the input? At the time of sale of the flat, or at the time of completion of the obtaining completion certificate?
Now, if the flat is sold after obtaining completion certificate, then only this issue comes.
So at the time of sale only,
Yes.
reverse, or what they claim, no, at the time when completion certificate is issued. When completion certificate is issued, you have to reverse the input tax. That is what they are telling.
No, if the sale is, if the booking is done after issuance of completion certificate, then this paragraph 5B2 of Schedule 2 of CGST Act 2017 attracts. Then only the reversal of input tax credit comes. Otherwise, if the booking is done before obtaining the completion certificate, there is no need to reverse the input tax credit.
Yeah, that's correct. But problem is, if suppose completion certificate is obtained in 2020, sometimes the builder will be selling it in 2021. So whether you should reverse the input tax in 2020 or 2021, that is my doubt.
2021, no, in my view, the completion is certificate is obtained in 2020. Then the reversal should be done in 2020.
Okay. Thank you. Thank you. Ajit, any query in FAQ? I mean, this thing in Q&A?
Dear members, at present, sir, I'm not finding any queries in the chat box. So, dear members, if there are queries or something, please, you may utilize this time. Of course, we do understand that you are pretty busy as long as the dates are not extended and you must be bogged down with the work. But please utilize this time to post some queries so that we can take up the same so that it may be informative to the others also.
Anthony, can you discuss something? I have a query. Here in the rate notification, we have a rate for construction of residential complex, and we have rate for works contract service. Is it works contract service means construction includes construction of a building also?
Yes.
Okay, then how we will differentiate this works contract service from construction of a complex?
How we will differentiate is that in work contract services, the input materials will be purchased by this work contractor. Movable properties is the transfer of movable properties there. In work contract, the builder purchases all the cement or all the raw materials for construction of the property. In case of construction services, in my view, the customer will purchase the raw materials for construction, and he will and the builder only does the service portion only.
Okay, that we are saying in the case of works contract, the builder purchases materials.
Movable property is included.
Immovable properties with the owner.
Movable property transfer is there. Here only services are provided by the builder.
Okay. One more thing we can discuss. Can I ask? If a builder that enters into agreement with a buyer of property, First he transferred that land portion.
Yes, landowner transfers the land portion. Here,
Here the landowner first transferred the land to the buyer of the property.
to the buyer, no, landowner and the builder enters into an agreement.
Agreement.
Landowner transfers the right to construct the property to the builder.
No, it is not actually not like that. The landowner and the agreement between the landowner and promoter is like that. Landowner transfer the property to the
promoter.
Not the promoter, the final buyer. Okay, then the promoter develops flat or villa on that land. In this case, will it be residential construction of residential complex or works contract?
In my view, if the raw materials are given by the customer to the builder, then it will become a construction of residential complex. Otherwise, if the construction, if the materials are purchased by the builder, then it will becomes work contract.
This situation arises when the land value is comparatively high, where we can include only 1/3 portion as value of land.
Yes.
In some cases, the value of land will be much more than.
Clarification is not given under this aspect. As of now, 1/3 deduction can only be claimed. So we have discussed earlier. If the actual value of land is can be ascertained, whether that value can be taken, the issue is not yet finalized. As of now, 1/3 deduction is only permissible.
Okay.
Satish, there is a query in the chat box.
Satish, further anything?
Yeah, there is a query in the chat box. Can you please read? Ajit, can you please read?
Yeah. I will just read it shortly. Anthony, there is an query in the chat box. It states that, just a second. It's from Manikandan sir. Now, there is a new concept called assisted living. No sale of room is there. In that, advance is accepted as security deposit, and 75% will be returned to the nominees after himself. 25% is treated as income. Whether GST is applicable to the whole amount or not.
I didn't understand the query. Can you please tell once more?
That's a new concept called assisted living is there. Assisted living. So in it, the client, what happens is he gives an advance, a huge amount of advance. I think I understand from the same, and this advance is being treated as security deposit, and of the same 75% will be deposited. Will be returned back to the nominees or to the client himself, and 25% will be treated as income. Now, whether GST is applicable to the whole amount or not.
And GST is applicable for such income.
Yes.
Here, booking is done before the completion of the project. No.
I think Manikandan sir, because I'm myself not familiar with the same. Can I put you on speaker, sir?
Sumesh, can you unmute him?
Hello.
Yeah, tell me.
Hello. Yes.
Ajit, I think most of the members are from Trishur only, no? So
Yeah.
Anthony, ഇപ്പോൾ നമ്മൾ എന്താ വെച്ചാൽ ഒരു പുതിയൊരു കൺസെപ്റ്റ് ആണ് അസിസ്റ്റഡ് ലിവിംഗ് എന്ന് പറഞ്ഞാൽ. അതായത് മേ ബി ഒരു 50 ഡ്വെല്ലിംഗ് യൂണിറ്റ്സിൽ ഒരു ഫ്ലാറ്റ് കൺസ്ട്രക്ട് ചെയ്യും. നമ്മൾ ആളുകളെ താമസിക്കാനായിട്ട് അനുവദിക്കും. ബട്ട് നമ്മളവരിൽ നിന്ന് ഒരു ടെനൻസി റൈറ്റ് ഒന്നുമില്ല. റൈറ്റ് ടു ലിവ് എന്ന് പറഞ്ഞിട്ടൊരു കൺസെപ്റ്റ് ആണ്. ലീവ് ആൻഡ് ലൈസൻസ് എന്ന് പറഞ്ഞാൽ ട്രാൻസ്ഫർ പ്രോപ്പർട്ടീസ് ആക്ടിൽ വരുന്നത്. ശരിക്കും പറഞ്ഞാൽ നമ്മൾ ഇതിന്റെ കൺസ്ട്രക്ഷൻ ഒരു സിംഗിൾ റൂമിന് ഒരു 45 lakhs അല്ലെങ്കിൽ 50 lakhs നമ്മൾ കളക്ട് ചെയ്യും. കളക്ട് ചെയ്തിട്ട് അതിൽ എങ്ങനെയാണെന്ന് വെച്ചാൽ അവർക്ക് മരണം വരെ അവിടെ താമസിക്കാം. അതല്ലെങ്കിൽ ആഫ്റ്റർ 5 years അവർക്ക് എപ്പോൾ വേണമെങ്കിലും അത് ലീവ് ചെയ്ത് പോവാം. അങ്ങനെ പോണ സമയത്തോ അല്ലെങ്കിൽ മരിക്കുന്ന സമയത്തോ നമ്മൾ ഈ കളക്ട് ചെയ്യുന്ന ടോട്ടൽ 50 ലക്ഷം കളക്ട് ചെയ്യുന്നത് അതിന് 75% നമ്മൾ അവർക്ക് തിരിച്ചു കൊടുക്കും, അല്ലെങ്കിൽ അവരുടെ നോമിനീസിന് തിരിച്ചു കൊടുക്കും. 25% ആണ് നമ്മൾ അതിൽ അവരുടെ ആ ഫസ്റ്റ് എമൗണ്ട് വാങ്ങിക്കുന്നതിൽ നമ്മൾ കട്ട് ചെയ്ത് മാറ്റുന്നത്. ദാറ്റ് മീൻസ് 25% നമ്മുടെ ഇൻകം ആയിട്ട് ഓവർ 5 year നമുക്ക് എങ്ങനെയും മാപ്പ് ചെയ്യാം. 75% വിൽ ബി റീഇംബേഴ്സ്ഡ് ടു ദ ക്ലയന്റ് ആണ്. There is no sale of property happening in this agreement. There is tenancy right actually. താമസിക്കാതിന്റെ നോർമൽ എന്താ പറയാ, നമ്മളുടെ അതിന്റെ ലിവിങ് എക്സ്പെൻഡിച്ചർ ഒക്കെ നമ്മൾ കളക്ട് ചെയ്യുന്നുണ്ട്. അതെല്ലാം GST അപ്ലിക്കബിൾ ആണ്. ഈ ആദ്യം വാങ്ങിക്കുന്ന 50 lakhsൽ 25% നോൺ റീഇംബേഴ്സിബിളും 75% റീഇംബേഴ്സിബിൾ ആണ്. അപ്പൊ GST നമുക്ക് 25% ലിമിറ്റ് ചെയ്താൽ പോരെ എന്നുള്ളൊരു ഡൗട്ട് ആണുള്ളത്.
ഡൗട്ട്. അപ്പൊ ഈ 25% എന്ന് പറഞ്ഞാൽ സെയിൽസ് റവന്യൂ ആണോ ഉദ്ദേശിക്കുന്നത് എന്നാണ്?
25% നമ്മള് സർവീസ് റവന്യൂ ആയിട്ട് എടുക്കും.
സർവീസ് കൺസ്ട്രക്ഷൻ സർവീസിന്റെ റവന്യൂ ആയിട്ട് എടുക്കുന്നത്.
കൺസ്ട്രക്ഷൻ സർവീസ് അല്ല, അവിടെ താമസിക്കാൻ അവരെ അലൗ ചെയ്യണതിന് വേണ്ടിയിട്ട് 25% നമ്മൾ നോൺ റീഇംബേഴ്സബിൾ ആണ് നമ്മൾ അക്സെപ്റ്റ് ചെയ്യണത്.
ഇതില് എന്താ
ഇൻകായിട്ട് നമുക്ക് എടുക്കേണ്ടി വരും.
ഇതില് എന്താ വെച്ച് കഴിഞ്ഞാൽ ടൈറ്റില് ട്രാൻസ്ഫർ ചെയ്യണില്ലല്ലോ ബിൽഡിംഗ്. ടൈറ്റില് ഈ പറഞ്ഞ ഓണറുടെ കയ്യിൽ തന്നെ ഇരിക്കുന്നത്. ഇപ്പൊ ഇതില് എന്റെ വ്യൂ അനുസരിച്ച് ഇത് റെന്റിങ് ഓഫ് ഇമ്മൂവബിൾ പ്രോപ്പർട്ടിയില് വരുന്നാണ് എന്റെ ഒരു വ്യൂ.
അല്ല, ഞാൻ ചോദിക്കുന്നത് നമ്മൾ സെക്യൂരിറ്റി ഡെപ്പോസിറ്റ് ആണ് 75%, അതിന് GST അപ്ലിക്കബിൾ ആവുള്ളൂ.
സെക്യൂരിറ്റി ഡെപ്പോസിറ്റില് GST അപ്ലിക്കബിൾ അല്ല എന്നാണ് എന്റെ ഒരു അഭിപ്രായം. എന്താന്ന് വെച്ച് കഴിഞ്ഞാൽ ഇത് സെയിൽ ഓഫ് ഇമ്മൂവബിൾ പ്രോപ്പർട്ടി ബിഫോർ കൺസ്ട്രക്ഷൻ ഈസ് കംപ്ലീറ്റഡ്. അതാണ് ഈ കൺസ്ട്രക്ഷൻ സർവീസിൽ വരുന്നത്. ഇത്
നമ്മളില് ഒരു ചെറിയ പോയിന്റ് ആഡ് ചെയ്യാനുള്ളത്, ഈ അഡ്വാൻസ് എമൗണ്ട് വാങ്ങിച്ചിട്ടാണ് നമ്മൾ കൺസ്ട്രക്ഷൻ നടക്കുന്നത്.
അതെ,
അത് ബാലൻസ് ഷീറ്റിൽ ഉണ്ടാവുക.
അതല്ല, ഈ അഡ്വാൻസ് എമൗണ്ട് വാങ്ങിക്കാന്ന് പറഞ്ഞത് ഇത് കൺസിഡറേഷൻ ആയിട്ട് കണക്കാക്കാൻ പറ്റില്ല. അത് ഏതായാലും റീഫണ്ട് ചെയ്യുന്ന എമൗണ്ട് അല്ലേ?
അതെ, കറക്റ്റ്.
അപ്പൊ കൺസിഡറേഷനുമേ ആണല്ലോ ഇത്. കൺസിഡറേഷൻ ആയിട്ട് കണക്കാക്കാൻ പറ്റില്ല. കൺസിഡറേഷനുമാണ് GST അപ്ലിക്കബിൾ വരുന്നത്. മാത്രമല്ല ഇത് സെയിലും ആയിട്ട് കൺസിഡർ ചെയ്യാൻ പറ്റില്ല. അപ്പൊ അത് എന്റെ അഭിപ്രായത്തില് ഒരു റെന്റിങ് ഓഫ് ഇമ്മൂവബിൾ പ്രോപ്പർട്ടി സർവീസ് ആയിട്ടാണ് ഇതിനെ കൺസിഡർ ചെയ്യുക എന്നാണ് എന്റെ അഭിപ്രായം.
പിന്നെ ഈ 25% നമ്മൾ റീഇംബേഴ്സിബിൾ, നമ്മള് 5 year വരെ ലോക്ക് ഇൻ ചെയ്യുന്നുണ്ട്. 5 year കഴിഞ്ഞിട്ടേ നമുക്ക് റീഇംബേഴ്സ് ചെയ്യുള്ളൂ. അപ്പൊ നമ്മൾ ഈ 25% ഇൻകം
75% അല്ല റീഇംബേഴ്സ്
ചെയ്യും. 75% റീഇംബേഴ്സ് ചെയ്യും, 25% നോൺ റീഇംബേഴ്സിബിൾ ആണ്.
അതെ, അത് നമ്മുടെ റവന്യൂ ആണ്, നമ്മുടെ ഇൻകം ആണ്.
25% P1 അഡ്വാൻസ് കിട്ടിയാലും അഡ്വാൻസ് കിട്ടുമ്പോൾ ടോട്ടൽ GST അടക്കണമെന്നാണ്. ഫസ്റ്റ് ഇയർ അതിന്റെ GST ഫുൾ അടയ്ക്കുന്നത്.
25% GST അത് കിട്ടുന്നതിനനുസരിച്ച്, അതായത് എന്റെ അഭിപ്രായത്തില് ഇൻകം റിസീവ് ചെയ്യുമ്പോൾ GST അടയ്ക്കുക എന്നുള്ളതാണ് വേണ്ടത്. അത് ഒരു റെന്റിങ് ഓഫ് ഇമ്മൂവബിൾ പ്രോപ്പർട്ടി കൺസിഡർ ചെയ്ത് ഇൻകം കിട്ടുമ്പോൾ GST അടയ്ക്കുന്നതാണ് ഉചിതം എന്ന് എനിക്ക് തോന്നുന്നു.
താങ്ക് യു.
Is there any other query?
No other queries yet. Quite a very interesting concept that Manisa just said of.
Yeah. There is no other.
If no other queries, shall we just move towards the closing of the session, sir?
Satish, can you
I
have?
think so.
Yeah, Satish, can you give your closing remarks?
Yes, sir. Thank you. Yes, actually, we have planned for a 2 hour seminar at BCM. Unfortunately, it completed a little bit earlier.
Satish, your video is off, Satish.
Yes, I will start. Yes, we have completed little bit earlier, and maybe most of the members are very busy in finalizing our tax audit. There are no queries. In fact, we have planned in a manner that there will be more queries because the subject is very hot. And unfortunately, there are no queries, so we can conclude now. Sir, your any closing remark, Anup sir?
Yeah. Thank you, Sia Anthony. It was really a useful session. You prepared the slides really well, and it was very informative as well. I hope you would continue with sharing your knowledge in the future as well. Wish you all the very best.
Thank you, sir.
God bless you.
Thank you, sir.
Thank you, CS Satish, for ably assisting Sia Anthony. Members, Christmas is just 4 days away. We are in a very tough situation, but still, that Christmas mood is picking up gradually. I wish all the members a Merry Christmas. Once again, I thank all the members for joining for today's webinar. Now over to you, Sia Ajit, for your formal vote of thanks.
Thank you, sir. Now, short, sweet, and informative. That's how I should describe the BCM. Of course, Anthony has considered that we members are caught up in the work in our office because the deadlines has not been extended. Now, real estate, it's a very important pillar of the Indian economy, and this GST on this real estate and works contract does form a very tricky part. Now, C. Anthony has done very well in explaining the law and procedures in a very beautiful manner. Thank you, C. Anthony Asukan, for the very wonderful presentation. And you did a very wonderful job in making the session quite informative. Now, thank you, C.A. Satish TG, for moderating the program and also chipping in with your wonderful knowledge. Satish is our go-to guy in our office for any doubts related to all the parts in GST, and he does quickly clarify the same. Now, I am very happy that we have one more young person, C. Anthony S. Sukan. We can call readily that he does keep himself updated. Now, thank you, CA Chairman Anupji, for chairing the session, and also Vice Chairman CRKK, all the way from the temple. For he has gone for that LLB exams. Now, lots of deadlines are down the corner. We at Trichur branch do understand how busy you professionals are all these days. Even then, you, the members of Trichur, has shown very good attendance. Thank you, dear attendees, for the support. Thank you all once again, and stay safe. New Year is down the corner, and also wish you all a very happy New Year. And